Hello everybody, this is Anthony for Investors Underground. Today, I'm in beautiful Phoenix, Arizona, and the plan is to meet up with Nate, John, Gregg, and Cody and ask them about some of the changes they've seen in the market in 2022 and how traders can benefit. Let's get going. This is Anthony. I'm joined today by Nate, Investors Live, and Cody, aka Odd Stock Trader, in beautiful, sunny Arizona. We're here today at Desert Botanical Garden, and I wanted to talk to you guys a little bit about some of the recent headlines we've seen about Fed raising interest rates and panic in the market. So as of this month, we're in September of 2022, the market, the S&P, is down for the last 3 months, about 10%. Year to date, we're down over 20%. And I'm sure you guys are getting questions about what do I do? Do I buy the dip? And I wanted to approach a conversation from the standpoint of a trader rather than an investor. So how do you think investors in times like this differ from traders, and what advantages do traders, particularly those who are nimble and can get in and out of a position, maybe benefit from the downtrend or the volatility that the market is offering?
Yeah, I think there's a lot of changes. A lot of people have had trouble adapting. The main thing is just trying to do the same thing over and over and over and expecting maybe this time's going to be different. And for the last 2 years, 3 years, everybody that's bought dips has been rewarded for that. And at some point, if you keep on doing reckless behavior, it's going to catch up. And I think that's kind of been the 2022 kind of unwind has been catching all of those dip buyers off guard. And you really start to find out whether or not you do have, something that's sustainable in the long run, and whether or not you can trade all markets or whether or not you just were a product of a bull market. Unfortunately, some figured out the hard way.
Yeah, I would definitely agree with that. I mean, it's we even talked on one of our last videos. It's for me, this has probably been the slowest year I think on record since I've ever traded, and I think there are two options, like you said. It's either adapt or figure out what you want to do. And for me, it was like, I'm going to take a step back because I know that this is not an environment that I'm going to excel in. Because when liquidity just dries up like it did because of everything that's going on, it takes away a lot of opportunities. Obviously, Nate's a lot more on the short side. I'm much more on the long side. So, for a year like this, just watching certain things, it's kind of like an eye bleeder for me as far as, sitting in front of the computer all day, especially during the summer when it's beautiful out. It's kind of like, what have I missed out by trading so hard for the last 2 years that I want to catch up on? So for me, it's like, I'm going to do stuff with my house, anything that I put off during the pandemic, I'm kind of focused on that, at least until the things that I see pop up again, then I'll focus back in. But
yeah, I would say volume's been the lowest as far as like how much I'm pushing buttons as well. And I think that goes for a lot of people, but I would say one of the biggest adjustments that I've made is forget the whole, getting prepared 7 a.m., 8 a.m. and maybe taking on a position early. I don't even bother with that anymore. I get my ideas 8 to 9 a.m., but I'm rarely pushing a button before at least 9:45, 10 a.m., or at least, getting a bias formed. I think that a lot of people are getting hurt by coming out of the market, 9 a.m., 9:30, and thinking that they're on the right side for the rest of the day. Meanwhile, you've got to see that first 15, 20 minutes to confirm your thesis. And a lot of times we make that trade, and we try to force our thought to be right. And it's 4 p.m. and you just wasted your whole day trying to make this trade work that you just had to take a step back.
Clearly wasn't going to work, yeah.
Right, that's one of the things that I've heard you mention in the room is give it this some time, see what the market offers, yep. See where the price action goes, and 9:45, 10 o'clock, I'll see you maybe start to put on like a feeler trade or something, yep. Like that. And so taking it a little bit slower if that's accurate for you, and even for you, Cody, yeah. Whether you don't trade, is it fair to say, the question's open for both of you, that not taking a trade is also a position to a certain extent?
I would 100% agree with that. It's like my process has slowed down tremendously, but every Sunday, like my Sundays, I almost always dedicate 3-4 hours to looking to see what is going on. So I usually set maybe 100, 200 price alerts just on specific names. That way, if I don't want to get up at, obviously Nate gets to get up at 8, I get up at maybe 6, even earlier than that. If I want to like prepare, I'll just allow to see my phone show these alerts if they've triggered or not, and even throughout the day if I'm doing something else that, let me take a look and see what this alert maybe provided. Is it a trade that I would take, or am I just going to go back and continue doing what I am? And a lot of it is looking at the chart. If it is on no volume and it made it through this price alert, I'll just ignore it. But if I see certain volumes come in and it's steady, then I might actually sit down and take a trade and look at it. But for the most part, it's for me, a lot of waiting and having alerts, but just enjoying life.
That alone is helpful though, just having those alerts, because you've done the work today, and then when they hit, they hit for a reason, and you can just kind of refresh.
It's just, then it's like an instinct. Like I set this alert for a specific reason, and if it hits my phone, if I'm either golfing or working on the house or whatever it is, then I'm like, I'm gonna look at it, because I took the time on that Sunday for 4 hours, 3 hours to set those levels.
Yeah.
The other part of his strategy is always take summers off.
Yes.
But he'll always start the summer, and then you're like, all right, maybe I should stop.
Maybe I should not.
Then he comes back November and just crushes it.
I don't know what it is, but I think I mentioned it. It's my summer theory is where everybody's just out enjoying life, and when it gets cold in the winter, everybody's inside, and there's not a lot to do. And I think now that we've got the COVID traders, a lot more people have brokerage accounts. So when people are inside and it's cold and it's the winter, the market always has more action to me. And that's kind of where I excel, because there's a lot more going on. Like the COVID years were I feel like a preparation for all the years of looking at charts and all that stuff. And it was just reactions every day. Like I didn't have to think about it. I just knew based off of everything I had seen before that this is a great trade and I could probably hold it all day, 2 days, 3 days. And I think that's some people may say, oh, it was just a lucky bull market, but like, is it that, or is that I kind of knew what to do because I was ready for it for 10 years?
Right.
So there's two sides to the luck story, and then that. So.
Yeah. In classic Cody fashion, you were kind of ahead of the curve in trends when it comes.
By 2 years, 3 years.
You were preparing for this odd, slow downturn during the summer. It's interesting that you also mentioned price alerts, because for me, at least, that sort of begs the question of the importance of maybe your entry, whereas most people might have just been a little bit lackluster in preparation for their entry. You setting alerts, and I know, Nate, you definitely always mentioned the importance of setting alerts. Do you think setting alerts now in this type of environment is a little bit more important than other times more recently?
I would think it's important in the fact that I'm going to save time that I would probably be just sitting in front of my computer and rather be doing something else, because I've afforded myself the opportunity to do what I want every day. So it's a matter of, do I want to sit in front of the computer for 8 hours today or not? And those price alerts kind of allow me to do that. So I could go to the gym, I can go golf, I could go hang out, I can go sit in the pool, whatever it is. Because those alerts are there and I've already did at least some work, I'm prepared for it. But even during COVID, I probably had 4 times as many alerts. I think that at one point I had 12,000 different price alerts set up and queued up on Thinkorswim, because there was just that many opportunities presenting itself. Whereas now it's a lot less. Like if things just continue going lower, there's no baseline to buy or set a level. So it's one of those things that if I have them, I have them. But I've set them for a specific reason, to be interested in that name because of that certain level.
It saves you money waiting for them to.
Yeah, exactly.
Otherwise, you're there trying to figure something out, and you could have just waited for it to hit.
And I think everybody forces trades when they're in front of their computer either way. So.
And when people are having trouble, they force trade. They end up sitting more and trying to do more. And really, when you're trading well, you're just waiting for it to come to you. And that's been the biggest change I think that I've made this year. I've been the most relaxed and most patient, and even all these small caps. And I think one of the biggest changes in this current market, within the last couple months, is we've got that like first mover effect, where if you go back a year or two, there's action every single day. But right now it might be a little bit slow, and then there's this reverse split run or something that just sparks 5 to 8 different other names, and then so you've got that quick 3 to 5 day kind of spurt, and then dies back off again. So the sooner you can kind of realize, like, hey, we have a new theme started, or a new whatever. I mean, it's just as soon as you can figure out that that's what people want right now, that's where you got to focus your attention to.
Yeah, and I haven't seen any major themes pop up, and I feel like that's the kind of the one thing is I focus on, because if it's a theme, I look at, like we've mentioned in previous videos, I look at every name in that sector and I'll probably just buy it. It's like a spray buy where one of these is going to just,
You're
5,
always
10X,
good with Bitcoin and
so it's
anything
like
crypto related.
Yeah, and
weed.
yeah. And even it was like, there was something, I can't remember who it was on Twitter, but like, obviously inflation has been a big thing, but somebody who knew what Bitcoin kind of was and the purpose of it, and there's a lot of all those different questions about it, but as soon as the Fed basically lowered interest rates right in the middle of the pandemic, my first initial thought was watching everything panic, obviously, but my first thought was Bitcoin is going to thrive in this environment of a ton of money, zero interest rates, because things are going to inflate later on. Whether or not you want to say the inflation trade was supposed to be at 50,000 or 4,000, my brain said Bitcoin is a buy at 4,500 or whatever it was right during that panic day, because of what is going to come as far as prices and all that. So, what is it? I don't know what it was yesterday, 18,000, 19,000. So it's still up pretty majorly from the initial just reason of why I wanted it in the first place. So there's all those
Except
different
90% of the people
yes.
that bought as an inflation head,
they buy it at 40, 50,000, which is, the contra thing. But, there's weird reasons to do specific things. And a lot of people, I think it goes back to my early days, I was probably the person who bought that at 40,000 going, oh yeah, this is going to be a hedge. Yeah. And then realizing, oh, why am I down 50% or more than that? And then it's a progression of just looking at different things and looking at the market, because the first trades I had ever were just massive losers. So it forced me to be like, why am I losing? I shouldn't be losing. And
with that said, if you buy at the 40, like this weekend I was here in Arizona for a wedding, and I was talking to a few people, and they're like, but all you have to do, it's just going to take time. You just have to hold. And like, it's the ones that kind of realize that, no, you don't just have to hold. No, it doesn't have to go back. And you take a step back, and the ones that make it out of that frame of mind are the ones that, will thrive, especially in this market.
Yeah, and rather than maybe in the past, the idea was just continue to buy the dip. What happens when the dip of the dip makes a dip?
Dip's even harder,
and so how can traders think about being able to capitalize in this market? Is it fair to say traders have an advantage in this type of market where they're not thinking necessarily? And I'm talking about, for context, the traders who are comfortable shorting and going long and going both ways. Is this the volatility, or even the bearish side, the downtrend, sort of possibly beneficial to traders rather than investors purely?
I think so, because most traders are probably cash heavy anyways. So if you've held cash this year, your cash value, minus inflation, just the value of the dollar has gone up, 20% this year. So even if you're a trader, you're probably sitting more in cash on a daily basis than most people. So I think that in and of itself is an advantage, because if there is an opportunity to strike, you can. Whereas if you're an investor, you're pretty much all in all the time anyways.
Yeah.
So.
And high volume or high volatility markets are obviously the best for traders like us, as long as you have proper risk management, as long as you're on the right side of the trade. And that's really, right now, if you're trying to find the bottom, like you said, if it does a dip, and then another dip, like if you have too much size, you're not prepared for that. So I think one of the episodes with Zach and Traders for Cause that we did, Lance was talking about the V, and how everybody kind of buys the dip, panics. But maybe they didn't sell. As soon as it rebounds, thank God I got out. But then he's coming in to buy, right? And then you appreciate all that upside, whereas I'm just happy to get out even. And I think thinking in that context, thinking in let everybody else figure out the bottom, just like, shorting. You don't need to find the top. You're going to get, run over. But just letting everybody else figure that out and pay for the information, and then you come in, is really the secret in this market. Because, even Friday, you had a nice rally, but if you're sitting there with a bias and thinking, well, it's going to be strong in the close, I'll add, and it just completely unwinds, screwed.
Because once you take that loss, your mindset changes anyways. Like if you're buying it, and then you're like, oh, screw it, I guess I'm wrong. Your mind just changes, in my view, at least in my opinion, because I've had it happen many times where I try to buy that move, and then once I just blow it out, I'm like, whatever. But then I watch it, and then you get angry, because you're like, why did I do what I did in the first place when I know what's going to happen? I just need to be more patient. So,
and at that point your mental capital is kind of
you're
spent.
drained.
And so to Nate's point, why waste that mental capital and financial capital trying to find the bottom when others can find that bottom? And it reminds me of the ABCD pattern, right? If you are able to find where a possible low is, when you get a higher low, at least at that point you're able to identify some sort of risk. Whereas most people might just be trying to fish for the bottom. It seems like it might be safer to play this one a little bit closer to being really responsible.
These aren't A+ setups, in a sense where, you have a small cap, you're familiar with a certain thing, and you can go in and take that risk. But in this environment, you're a very small player compared to the overall market. It doesn't matter what you think or how far it's gone, and it's better to have the money on the same side as you. And I've kind of explained, like, sometimes in the room, it's like you should be upset that you keep on missing your fills on the rebound, because that means you're on the right side of the trade. Or if you're shorting, you keep on missing the ads. That means you're on the right side of the trade, because there's a lot of competition. You keep on, not getting that entry. Somebody else is in front of you. And otherwise, it's like, oh, I have too much. This is my last ad. All right, one more ad. And it's like, where's the bottom? We're in no risk.
Right. Yeah, it makes a lot of sense to me, thinking about the idea of major players with lots of money, hedge funds dumping, and a retail trader so eager to make those purchases when you've got the big guys with a lot more capital trying to dump. And so just to your point, like, it makes a lot more sense to just wait maybe a little bit. And so, yeah, it sounds like maybe cash is a position. Waiting for the A+ setups to finally show themselves is much more of a safe way to think about and approach. We're in September, so to maybe approach September of 2022 at this point.
Yeah, and I don't anticipate the end of the year being too hot either, as far as just the overall market. For the kind of same reason, people are going to probably look at their balances and their stuff like that. Even if they have brokerages that have stocks, they're going to be like, oh, maybe I should just get rid of it because I'm losing so much money. But that's when I start getting interested, is those emotions. I see emotions in charts, especially when there's good, decent liquidity. And, with interest rates, the market has essentially reverted back to basically 2007. So if there's companies that are just made money, and there's a lot of zombie companies out there that are just going to go, I think we're going to see a slew of bankruptcies in a lot of stocks. And one of my favorite trades starting was the Q stocks. So like that, it's one of those sectors that it's one of the biggest moves I've ever seen. I mean, minus 2020, because those are some insane moves, but some of these Q stocks, and I think we'll start to see a lot of them next year, they failed 10x, 15x in a few days. So like BTU, I think is even the ticker now. It was bankrupt. It went to BTUUQ. It went from like $1 to 24 or whatever it was.
I didn't even realize that was that same one.
And it was an insane move. But those stocks are going to be opportunities, and that's kind of my wheelhouse, because I remember those.
That was Las Vegas.
Yeah,
Las traders. Every time there's traders for cause, it's a crazy move. But that BTUUQ, I remember that.
So it's one of those things that people kind of have to reset their mind to an era of not free money anymore. I mean, you got mortgage rates pushing 6.5%, which is mind-boggling to some people. So house prices are going to come down, and all those things that it's kind of got to filter itself out. And I think for us, it's kind of nice to be able to just be on the sidelines, because before I was trading, I was working for like $13 an hour at a hotel. So it is what it is, and to afford myself the opportunity to be here and do this is amazing. And if I can take, well, haven't really traded a lot since even March of 2021, but to take that time off and just wait for what I know to show its face, and then just attack and basically go all in on it, I think that's what I'll wait for.
I think filtering out was like the key. What you just said is like because everybody can just average down, but there's got to be a point where you just blow all that out. Because I mean, you're not just going to reward everybody just average down, and then it just rallies and everybody's rich again. I mean, there's got to be that moment where either smoked, or they just are like, they run out of patience. And my personal opinion is like, we're not going anywhere in the next 12 to 18 months. It's just going to be, there's going to be some relief rallies, but it's going to be mostly, sideways action, I think. And I think everybody that is trying to force that bounce, or fear of missing the entry for the bounce, is going to get either filtered out one way or the other, whether it's through panic or through just time. And then once everybody gives up and stops trying to figure it out, then we're going to snap and it's going to be like, wow, how do we get back to 420?
And what do you always say? Is look left. So, and that's what I've been doing is a lot. If you look at just what the S&P 500 looks down to, and then you look left, there are so many things, like history just repeats itself. It may not happen exactly, but literally if you look at the S&P 500 right now versus early 2008, they're almost identical right now. It's kind of crazy. So I think the Fed's going to keep doing what they're doing until some major player somewhere just breaks and they see it as a risk to the overall market, and then they may have to pare back what they're doing. But I think they're just going to keep pedal to the metal until that happens.
If you look a lot of times on those charts, left too, and you'll see like when they break certain key levels, and then the candle comes all the way right back, and that's this filtering out process that you see it. I mean, you see it every single day, but I mean that's what we need to kind of see on a macro level, in my opinion.
And the VIX isn't even; it barely hit 30 yesterday.
Move,
and I think that needs.
There's
to
no
get
panic at all.
50, 60, yeah, and that's the problem. Is there's no panic.
There's a lot of people hedge. The options have a big do with that, but and that's the other thing too. Some of this isn't like just selling because they need to. It's because these options are just unwinding, and there's the markets in general are extremely thin, and they're all options driven. And I don't know enough about options to really dive in and talk about it, but my buddy who's very good with them has always been saying, just watch when things start to pull back. I mean, it's crazy how much these things can just unwind. $30 in a day, $40 in a day. You're like, where did this come from? But it makes total sense when you look at all the options and what has to unwind.
Yeah. It's interesting that you mentioned looking left because, like you had mentioned, these major capitulations, if you look historically, tend to be where the bottom of the markets happen, and then things start to pick up from there. Not to say that's guaranteed to be how this is going to all end, but and to your point, Cody, traders could be really researching right now, getting prepared, rather than pressing buttons. It sounds like, and correct me if I'm wrong, but it sounds like, you're going to be doing some research into different maybe sectors or names that are of interest to you, so that when this capitulation happens, when it's time to really make buys, you'll be ready, you'll be researched, and you can let your money work for you then.
Yeah, and I think that's exactly what I'm going to do. And it's usually a thing is maybe I'm more attuned to the time and the clock and all that stuff, but whenever daylight savings comes, that's my hey, it's time to work. I don't know what it is. It's maybe because the sun's up less during the day, because it's hard to not be outside during these beautiful days here. So it's looking out the window, seeing how nice and sunny it is. It's why am I inside in my cave up with my screens, But having just the history and all that is exactly what you said. There's some sectors, there's a lot of names, there's a lot of things that have gotten absolutely destroyed, but I don't want to be the guy who's trying to find the bottom. I'm going to wait for the pattern that I recognize on a lot of names.
Which is where you set your price limits, and then you're going to get triggered for it.
With COVID and the same thing with Bitcoin, there was two miners that were public. It was Mara and Riot, and the day it hit 55 cents, I think I messaged him or I tweeted, I was like, Mara is a buy at 60 cents. And then I saw it, a year later, it was $70. I'm like, well, that makes sense, because they were the only players, and sometimes the only stocks that are public in a certain sector just get the benefit of being the only stocks in that sector. So that's a weird thing.
Once sector money comes in, it's just a supply and demand thing, and if they've missed this one, they're going to buy this one, they're going to buy this one.
Because that's the only option to be a part of that trade or that theme. And even in 2017, when the only listed thing for Bitcoin was GBTC.
Yeah.
And I think it was $170 pre-split then, and it went to 3,000, 4,000.
Yeah.
And so sometimes if there's it's nobody can predict the market. Nobody can predict what the next theme is going to be. So researching and knowing what is even out there to trade is important. So.
Yeah. And I think that's important too, is knowing that there is going to be something. There will be, based on having been around for, COVID, and before that, 2007, 2008, plenty of traders experienced that and have an understanding of what a bearish market looks like. And so maybe sort of to recap, and correct me if I'm wrong here, but as traders, it sounds like it's a benefit to be able to just sit back, research, and be nimble, wait until the time is right to start buying or making trades. And no one's forcing you necessarily to make trades at 9:30 or 9:45, and maybe your count stays where it is or goes up because you're waiting.
Yeah.
I think you'd be pleasantly surprised how much better you do if you just wait. And you know, that's opposite what I've always done, but it's better. I'm taking better trades, less trades. I feel better. So I think it's extremely important to kind of look through that lens.
It can be a little boring sometimes, because we've been doing it for so long. I feel like it's just our habitual nature. So like to pull yourself away from that, like I've never seen him take a day off, like a week off in 10 years since I've known him. So like to see him just kind of pull away, I'm like, all right, it must be an environment that I'm okay with not doing a whole lot. So and affording yourself to be a trader, like that was the whole reason I got into it, was I didn't want to have to just be in the whims of what the market
Well, you can't
did.
forget that. That's the thing. It's like, do you trade to live or live to trade? And
exactly. I got into it to be doing exactly what we're doing now. And what I can do every single day is just do what I want. If I want to trade, I'll trade. If I want to do whatever, golf, build shelves.
And if you don't recognize that soon, you know, as a trader, then it's going to be with you for life. And you got to break that mold. And it's very hard to do. But I always use the analogy, like, you know, I drive through my neighborhood. If I have like an appointment in the middle of the day, I see a neighbor like mowing his grass. And I'm like, man, that must be nice just to be able to do that in the middle of the day and like not have to worry about a thing. And I'm like, I should be able to do that. but I choose not to because you know, it's the market. But I'm getting better at that. And that's why we do this, like you said. I mean, so you need to take a hold of it and do it.
Yeah.
Got to remember why you started in the first place, I feel like. Or you'll be 85 and you'll be like, where did it all go? You know, so it's
or 88.
Or 88.
Just walked by.
Yeah, and longevity is part of this, hopefully. And so it's really interesting for me to hear, you know, experienced traders and successful traders say, I'm kind of waiting. I'm waiting, you know, I'm not pressing as many buttons, because it gets me to thinking, and I'm sure plenty of others who probably should be thinking, well, what am I doing going around pressing buttons? We don't necessarily want to have a button pressing problem, you know, where we're addicted to that. We should be thinking about this as traders. You know, where does maturity come in? And maybe, you know, you've reached a next level of maturity when you are not as interested in just being in a trade just to trade.
Exactly. There's an income stage where you need to kind of build your account, and then there's like the growth phase, and that's when you start to kind of look at bigger picture and being a little bit more patient, where you don't need to come to each market and think, oh, I need to pay this, I need to do that. And I think a lot of people do that, and that's why they push the buttons. That's why they, you know, they're trading for income. Where can I find $700? Where can I find this? But you will stay that way unless you make an active transition into, you know, taking a bigger picture, and you'll realize that it's a lot better that way.
I mean, I was going to say to that point, as far as the income trade, that wasn't too long ago for me. As far as like 2017, 2018, I was still kind of doing that. Like, where can I make $500? Where can I make $700 today? And, you know, it's a totally different mindset once you've, you know, achieved a certain level. And as far as your account, you're like, do I really need to do those specific things anymore? And, you know, it affords you the opportunity to mow the grass during the day, or set alerts just on a Sunday and see what the market's going to do, because I think people have underestimated this year just the titanic shift of what interest rates being raised is actually going to do, and what it's already done. Because, you know, just think about 2007, 2008, and it's a weird time.
Yeah. Well, thank you guys. I hope that's helpful for people out there.
I hope it is too.
So to recap, traders don't necessarily have to be pressing buttons. They could be researching. They could be setting alerts, look left, take a look at some charts in the past, all of the above, and get in when the time is right, not necessarily now.
And I'll add one more to that: read books.
Read books.
Still working on that.
or audio podcasts. Great, thanks guys.
Fantastic.
Hello, this is Anthony. Today I'm joined by Gregg Shabika and John Kump. Gregg, you might know as one of the more popular and, dare I say, legendary traders within the trading and specifically momentum trading community. If you've read Momo Traders, you may recognize him as the storyteller. And I'm joined by John, who Gregg has teamed up with to work on improvements to Gregg's trading through the use of software, whether that's APIs and bringing in data, or working on algorithms and sort of a black box, if you will, to improve what Gregg does every day. So thank you guys for taking the time to speak with me today. I'm always curious. You're one of the few traders who I've heard say that you knew you wanted to be a stock trader from the time you were young, as a kid. And so, is now that you've reached this level of success and independence as a trader, is this what you envisioned stock trading would be like? Or if you can somehow get into a wormhole, go back and give yourself some advice and tell yourself what trading would eventually be like, what would that conversation be like?
Right. I mean, if we trace it that far back, certain things have changed dramatically. One of them being the internet. So, going from that first thought, like it would be nice to make a living doing this, to actually trading. I mean, there's no way to have been able to see what that was going to be like, because it's just a completely different world. So I would say so what you're referring to is going all the way back to when I was in 8th grade, and they used to do the stock market game in school, So I did really good at that, and that's kind of where that thought came from. But there was a giant gap there between, like, well, I know you can make money doing it, but how do you actually make a career out of doing that? So there's sort of like a desire, but definitely, there are some missing pieces that would come along later. Obviously, the biggest one just being the internet and online brokers.
Yeah. And technology, right? I mean, I know you had mentioned that you had started to learn how to program TradeStation, and so what has the evolution for you in terms of technology been like? And I think, how John fits into all of this, at what point did you go from being able to program things on your own to, getting in contact with John, and how did you meet, and, what type of changes in technology were you interested in seeing develop in order to take your trading to the next level?
I think that's a very long story to work through all those pieces. When I got started trading, I was much more focused on finding trading systems to automate trading, and this goes all the way back to 1998, 1999. So obviously the technology was far inferior to what's available today, but my progression, both as a trader and as far as technology and programming, a lot of that was just driven by a need-to-know basis. It's like being self-taught, but you essentially identify, I need to figure this out in order to test an idea or to implement something, and you just slowly learn more and more that way. So there's the evolution, and I mean, we're talking about a long time till John came into the picture, but over the years, I mean, there were a lot of various projects, programming-wise, which I kind of slowly built out. A lot of them would start off very small, but over the years, I just add more and more things, and a lot of times it was just a matter of I need to figure out how to integrate, some new method of, it could be something as simple as setting an audio alert to, some way to automate data, to importing data. I mean, all kinds of things. But I reached a point where, it's both very time-consuming, but also, you hit a lot of ceilings as far as, even when you're self-taught, it's unless you're making a full-time endeavor. Trying to learn and it's kind of like a side career because I was trying to trade. I just hit too many ceilings, and eventually, John's not the first programmer I ever worked with. There were a few times when I hire people, but just for side projects, not for. But John's the first one I brought on to work with full time. So, I got to that point where there were so many things I wanted to build and develop, that it came time to bring on someone who knew what he was doing.
Well, that's also very interesting, because as traders, I think one of the things that I've heard a lot of people say is being able to adapt is important, and knowing where maybe your weaknesses are or what you can and can't do, where you sort of hit your limits and maybe have to change things up in order to grow. It sounds like that's what you are sort of describing a little bit, to get into contact with John and bring someone in who is very good at the programming side of things. And so what's that relationship been like? how did you two meet? John, do you trade as well? And can you tell us a little bit about the things that you're working on with Gregg?
Okay, yeah, so I, probably like a lot of people, I knew about Gregg from seeing his name on the leaderboard of Profitly. And this is back when the days of awesome penny stocks, running OTC pumps. And that's my very first introduction to trading was shorting these promotions, OTC promotions. So seeing Gregg was like the hero of that. And so, I followed him on Twitter, following a lot of these guys. And when the SEC started to come in and cracking down on the promoters, and that kind of dried up the market. So I thought I knew how to trade, and I was doing really well for about 2 years when that was all working. But then once they cracked down, and I realized, I have no other strategies. I had mixed results. I wasn't losing too much money, but it wasn't quite as simple as it was before. So I kind of shifted gears and focused more on the programming, and then coming back full circle, I still kind of, kept my eyes on the trading community, and still chatted with a few people. And through a friend of a friend through Twitter actually said, "Oh, Gregg's looking for a programmer." It's just complete random circumstance that came about, and just got on the phone with him, and cut to, here we are. Now it's been 4 years. It seems like it's gone by super fast. So yeah.
That's awesome. I mean, what kind of trading ideas are you guys building out, and is this sort of something, Gregg, you'll have an idea and work with John on it, or do you bounce ideas off each other, and what's that relationship been like?
Well, if you go back to when John started, the first things he started working on were ways to either automate and make things more efficient, and then over time, we started building out, kind of the next step would be to create some of our own algorithms for trading, so it's kind of like just, one layer at a time. But there's such a broad basket of different things he does to kind of enhance our trading. I mean, a lot of these ideas, a lot of the things I've worked on before John came along were just simply things to make things more efficient. It's like, time is of the essence in trading, and if you lose 3 seconds on something, that could be a missed opportunity. So it still comes down to that. Like, we still work on things just to, to be able to go from, to catch an alert to placing an order, as quick as possible. But
order input being a huge thing. How many seconds does it take to place an order? And Gregg, he's a master of efficiency, to the point where his hands sit on the keyboard is how he does his hotkeys to the least amount of movement of his hands, that level. So it's pretty impressive to see, what Gregg has come up with. And but that's sorry, I didn't mean to interrupt, but it's for all for speed. So and when Gregg's in full swing of trading, using some of these tools, it's a sight to see, because he can have 20 symbols, orders to different brokers going off. The other traders, we joke, because when you see Gregg smashing the enter key for his orders, it's da 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 da, and the orders are just going. And the center point loves us because the executions are coming down like this. So. But it wouldn't be possible any other way without manually clicking in, or hotkeys, I guess, is the only other way.
I mean, when it comes to trading, at least day trading and things we do, I mean, it's very obvious to me the brain is way faster than the inputs from the hands, which would be either touch screen, keyboard, mouse. I mean, you can think in order, lightning fast, but if it takes you to go from that even 10 seconds till it's actually fired off, I mean, you lost a ton of time. Not only, I mean, you're losing the potential opportunity because the price could move, but if you're trading 10 symbols simultaneously, I mean, other stuff's happening and you're losing time just trying to enter an order. So, I mean, that's at the core, but everything that goes with it would be, being able to catch a news alert like lightning fast, because your attention goes from placing one order to all of a sudden having to make a lightning fast decision on the next thing, and then and then the next step beyond that, as I was saying, like with order algorithms, like so you might, again, it could be in your head lightning fast, like, well, the best way to execute this would be to spread the order out and kind of piecemeal it out for the next 5 minutes. Well, why the hell would you want to sit there and enter an order 10 times over 5 minutes when you could have a programmer take that exact concept and and do it for you? Well, now I mean, it's all efficiency, and so essentially, as much as you can theoretically, as close as you can theoretically get to how fast you can think, to actually placing orders and executing decisions is going to maximize your profitability.
Right, and I've heard you speak before about the importance of ergonomics and having your monitors placed in the right ways, the right places. Vertical monitors is one example of that I've heard you speak about, and this sounds like the next evolution of that, which is really great to see an experienced, successful trader continue to improve and optimize what they're doing. I think that's always really, really cool to see. I think for people who don't hear from you every day and see what you're up to know that you're continuing to break through in these ways, I'm sure people are going to now start conceptualizing ways that they can improve their efficiency and things like that. The other thing that I think is really interesting is that it sounds like you are kind of thinking more along the lines of splitting being entirely discretionary and maybe thinking more in terms of like systemic or building an algorithm or a black box. Is that accurate, or are you still mostly discretionary?
I mean, when you go back to when I got my start, my desire was always to find the so-called holy grail of trading, and to find the system that would just, make me a billionaire and I could retire. I never quite found it, but that's always there. You're always hoping you'll find something, and perhaps expectations get adjusted to become more realistic. So, I don't expect quite to find the holy grail, so to speak, but it's always nice to find ideas and things that you can automate or systematize, to essentially find another strategy. Like, why not leverage your your account to make more money by finding more systems and strategies, that's to some degree also been I think a key piece of how I got to where I'm at is I'm always looking for new things, and a lot of ideas start out by researching something kind of with the intent on hopefully finding something you can automate, and it ends up becoming perhaps just a way to improve an existing strategy, or perhaps a standalone strategy. It could be, but every time you find a new something to add to the mix, you get better, and therefore that's always been something I've done over the years. Is I'm always looking for some just new ways to improve, and it's like you find, even just like a new chart pattern, and there's always that desire. You look at it like, well, gee, maybe I could automate this, and it'll just, and a lot of times you run into more problems when you try to automate it, but yet it's the desire to get to that point that forces you to, really extract as much as you can from that idea, and then you integrate it, and and it's just another way to increase your profitability.
Yeah, and do you, in your search for the Holy Grail, have you over the years sort of changed your playbook? I think a lot of people may know you as shorting the parabolic moves, but if there's anything that I've sort of deducted from you and how you trade, it would be this ability to look for different patterns that could be profitable. And so my question is, are you still mostly shorting, or are you also getting in on the long side as the years have gone on? And if so, what has that evolution been like and looked like for you, and how does John help you accomplish that?
Well, I mean, I think there's a reason why there's so many people among, the momentum traders, swing traders, day traders. There's a reason why short selling is popular, and it is because, at least for certain types of setups, it can be very profitable, and there is something that's hard to resist about that. So it's hard to get away from it completely, just because there are really good opportunities. But there's certainly plenty of other setups I trade. I feel like perhaps I'm short biased in part just because I feel like with all traders, like you can almost group them. Like there are people who are a bit more cynical about things. They're short sellers, and there are people who are a little more, they kind of see things a little bit more optimistically. Mm-hmm. I mean, it's just like a personality type, and they tend to go more long. And I don't know. It's just very generalized ways to look at it, but I fit into that camp. I always look at markets, and I'm always skeptical and cynical of what I'm seeing, and therefore that personality type is going to be a lot better at seeing the BS, or at least capitalizing on it. And it's hard to just, it's hard to take that away. It's just you end up being very good at it just because it fits, right? But that doesn't mean that's all I do. It doesn't mean I wouldn't trade a long-only strategy. I mean, there are some strategies which are longs, but whatever fits your personality is always going to be the thing that you're going to excel at. So it's hard to get away from that.
Yeah, my question was based in terms of when Gregg comes to you and says, "Hey, I'm thinking about this idea, or I'd like to achieve X, Y, and Z." What does that process look like? Does Gregg give you some ideas for like a sort of the finished product, or a couple of goals that he would like to see, or an idea for a script? What does that generally look like, and how does something go from maybe what Gregg wants to see to becoming a finished product?
I think there's been a real wide range of the way things go. So there has been certain specific things like like a peg order. Mm-hmm. So we have a custom peg order, which we can do all these special settings, and it works how you would expect. It can just follow the bid and the ask, reads the tape, and the order moves automatically. And that's very specific. You can visualize how it would look, but other stuff, just by me kind of being in the room with these guys and observing what they do, and almost just seeing ways, Gregg being the master of efficiency, seeing something that they're doing, I'm like, oh yeah, I could just automate that. Or even part of the morning routine. How do they get their data feeds? How do they run their scans? And having tools to pull all this data together. And the cool thing is, when we start automating more of these tasks, then that kind of goes into a database, and then now we have that data set to then run algorithms on. So it kind of just grows and grows and grows. It's just grown to this huge data set. We pull any data that we can, watch any data we can, and can try to fire orders on anything that we can. Just sort of depends what some stuff works, some stuff doesn't. But I feel like my job is mostly just to connect things together, and then they kind of figure out what works and what doesn't. Mm-hmm. And I feel when we first started, we kind of tried to automate maybe too much. Let's just start this algo here. It's going to start the trade, do the shares, exit the trade, all this, and you end up writing this huge, complicated piece of code. And now we've realized, you become too systematic, and there's always going to be that discretionary bit. And so breaking it down into little subsections so the trader can execute each piece of the idea in real time as the trade's developing, and keeps the coding simple, the algorithm simple, and it's kind of a hybrid approach. So I feel like what we've gravitated to is maybe being more naive when I first started, thinking the same way with Gregg, thinking, oh, there's going to be the black box out there somewhere, and but then trying it is a great way to learn and research and try these ideas and become better. But at the end of the day, adding that discretion piece in and is I think is always going to be there. Mm-hmm. At least for this kind of style trading that these guys do.
Yeah. And have you guys run into any sort of roadblocks or anything in particular with the rise of, algorithms out there trading, whether it's games in the order flow and things like that, or increases in the cost of data, or maybe like API rate limiting, or any whatever it may be? Do you guys run into any roadblocks that sort of prevent you from doing what you want to do in the way that you want to do it?
I mean, I think the biggest frustration, which would, our biggest roadblock in that sense is, a lot of the platforms we work with, a lot of the news feeds, quotes, I mean, all these things, they're geared towards smaller traders. They're not geared towards someone who's trying to do what John's doing. And so it's very frustrating. And then there's like a giant gap between our level and then like some giant institutional level, who's going to have resources, to pay for things and data feeds which are far different than what we're dealing with. And it just feels like the vendors do not give a crap about us. We're not worth their frustration.
The average
retail stress.
Retail user, they seem they don't care.
So I mean, I feel like one of the biggest, and this would tie into, kind of one of the reasons of how we got to the point where we're at is in a similar way. Like the trading platforms. I mean, all the platforms, all the software, all the feeds, everything that's geared towards, marketed towards the small individual trader. It has always been absolute crap, garbage, just terrible, not well thought out, not well presented. And that's kind of what at least fueled one side of how we got to where we're at, is like, trying to improve on things which were, not very, which were not maximized for efficiency and for profiting. And we have made, I think, great progress into that, through that, right? But yet you still run into that over and over, where it's like, all right, here's the next idea, and it's not whether or not it can theoretically be done. It's a matter of whether or not because you always have to tie in to something, a trading platform or some type of data feed. We can conceptualize it, he could build it, but if somewhere along the line someone else is not willing to host that service or enable us to do it, you hit a roadblock.
Yeah, I think a good analogy is compare an API for a broker, let's say Ameritrade, E-Trade, and compare that to what is the API for Facebook or Google, Gmail, right? You could follow, you pull up the for Gmail, you pull up the documentation, they already have sample code, you download, you're up and running, basic version in 30 minutes. If you've done it before. And with these other, we've had, that's that thing what Greg's talking about. Sometimes this stuff doesn't work, and we feel that sometimes we are the only people who've ever attempted to connect to this because of some of the problems that we've run into. It's just so bizarre how difficult it is sometimes to get up and running, and it's a barrier of entry for how many headaches you have to do. Because this is something, I've tried to kind of do this stuff on my own when I was trading and working, but I couldn't commit the time to figure out these problems. It wasn't until I started working with Gregg and I could sit on it, work for it, spend all day, back and forth on support emails trying to get things connected, that actually got it to go through. So, and it's sort of ironic how something like Facebook, Instagram, you connect for free. There's no money involved. I mean, your data, whatever, but then with trading and money's on the line and you're trying to put orders through their broker and they want you to put more money with them, and then their API is very, very poorly written and poor documentation. So
yeah, when I had John connect to E-Trade's API. And first of all, it was so bad that there would be moments where we would just stop what we're doing and break out laughing out loud, because it's just like so bad. You can't help it. Like, there's no response. Like, you're just to the point of like, it's so stupid, so pathetic. And then it got to the point where, John's emailing, I guess is the tech support guy, and John's essentially training him on their platform, because like they didn't know what they're doing. It was poorly done. John's figuring out stuff obviously for the first time because no one there knew how to do it.
It almost seems some of these companies, their API is just a checkbox. They say, "Yep, we do have an API. It's up here. Go ahead and connect." But then really, nobody actually takes them up on that.
Right. Right.
Nobody was dumb enough to try to take it all the way down to the road. But we tried it.
Yeah.
Things are getting better now. One company I will shout out is Polygon for their data provider. Their API I was almost in disbelief on how smooth I could connect with them, and I know they're rising in popularity. And I know it's pretty popular among scripters, self-taught traders, maybe not a full programmer, but if you know a little bit of scripting, maybe a little bit of Python, I've seen a lot of people have success. They can connect to Polygon, pull their data, run back tests, and stuff like that. So kudos, to them. They've one of the very few data providers that we feel have been.
I do want to chime in by saying that a lot of, I'm venting after many, over 2 decades worth of frustration. But John's right. We have seen improvements, and I'm very quick to bash trading platforms and programs. Again, it's because I've been doing this, for 20 some years, and I've dealt with so many headaches, and I can't stand how, you submit something to them, ask them, can you please improve this? And it's so obvious to you, and they don't care. That's not their business model, is not to make a good product. It's just,
Yeah.
But yes, there's finally been some improvement. So I think I can, probably concede a little bit that it's not quite as bad as I'm saying, but I'm kind of reluctant to say it's good. I also want to address the general audience for people that are out there, some of the stuff we're talking about doing. I don't want anyone to assume that you have to do any of this to be a successful trader. I mean, the stuff I'm talking about, even for myself, it's it helps you trade better when you're more efficient, when you can process data, digest it, act on it quicker. But, you can still use the really basic rudimentary trading programs and websites. You could still be plenty successful. The point is, you hit a point where in order to keep improving, you have to move past that, so, by no means, John, on the one hand, I don't need him, but on the other hand, without a doubt, he adds enormous value, so it's one of those.
Yeah. And the reason I bring all of this up is because I think it's important for people to understand, zooming out, the bigger picture. Incredibly successful trader that people know of, has been trading for, safe to say, decades at this point. The message is you'll continue to trade, you'll continue to evolve, you'll continue to have new ideas for your trading, ways that you want to improve. And even with someone who's skilled and can code, you're still going to run into issues. And so trading itself is this almost like an art to an extent, to a certain degree. Is it safe to say that you're never going to fully be finished with your piece of work, so to speak? You're always going to be evolving. There'll always be roadblocks, things that you think you can do better. And for anybody out there who thinks it's just a quick, easy way to make money, fine, that's their belief. But after decades of doing this, is it safe to say, it continues to be difficult and not as easy as people may think? Is that accurate to say?
Trading is inherently a very frustrating process. There's always, there's so many things that can go wrong. There's so many things that you can screw up. It's something I would never ever characterize as easy. If you want to dabble in the markets, have fun, and that's all you're doing, kind of as a hobby, and perhaps it's easy to enjoy it. But if you get pissed off every little missed opportunity, you're never going to be happy, right? But it's just a matter of what you're shooting for. Kind of the difference between a pro cyclist and someone who's going for a Sunday afternoon bike ride. World of difference. One is enjoying it, and the other guy is obsessing over. It's work, and he's obsessing over every tiny little, half-second improvement.
Yeah, it's his livelihood.
Yeah,
safe to say, and they're always looking to progress. It's more than just simply for the enjoyment of a few minutes or hours. Yeah.
Absolutely. Yeah.
Great. Well, thank you guys so much for talking to me. I think that'll be helpful for people who might just want to get a glimpse into what maybe trading in 10 years or 20 years might look like for them. It will evolve. So thank you guys.
That.
Thank you.
Hey everybody, I'm back with Cody, Nate, Greg, and John. And I wanted to just ask each of you guys your perspective on the changes in the market that you've seen this year in 2022, and particularly for the guys that are experienced and got to live through different market cycles. Where do you think this 2022 market cycle being a little bit more bearish not only ranks in terms of the other financial crisis and years before then, but also how do you think traders should think of being safe? What should they do? Should they continue to trade? Should they foot off the gas, so to speak? Cody, if we could start with you.
So I kind of got into trading in 2011. So the only thing I knew before that was just what Warren Buffett said: buy when there's blood in the streets. So when the panic in like 2008 and 2009 happened, that's kind of what really got me interested. So going through the era of essentially cheap money for the last, what has it been, 14 years, I think a lot of people had developed some really bad habits as far as like what we were even speaking about earlier, just buying the dip and you got rewarded for it. Whereas now we've kind of reverted back to an era of higher interest rates. So that's going to just vastly affect the market completely, as we've seen this year. And I think it will continue to do that for probably even an unforeseen amount of time, just because a lot of that decade was just very steady grind higher. And there were a few moments where even in 2015, the Fed said they were going to taper and start selling. And a 3-day period was probably some of the biggest panic that I've ever seen or ever witnessed. And it immediately rebounded right after that. So, for my experience and through all of that, current environment is, I would say, if you've been trading for any amount of time, just do what you know and trade what you see. And it should be a reactionary thing instead of a forced trade.
Yeah, I think the issue a lot of people are having right now is trying to do like market timing and trying to find that bottom and trying to position and doing all these different things. But what is working is a lot of the same. It's just taking a little bit of a step more back and waiting for those setups to kind of come. They are changing. They are not doing what they used to do, as far as day one. But a lot of times, day 2, day 3, day 4, it's just like what you've seen before. But I think that I wasn't around in the .com bubble, but obviously financial crisis, I was there. But more so, still green at the time. Not really maybe as prepared as I am now. So I think each time we have one of these big events, you're getting more and more prepared. Just like when memes went, like this is the moment we've all been waiting for. All these people are now learning how to trade, just like Bitcoin. People are like learning how to trade it. You have a huge edge because you're light years ahead of all this new retail crowded trade coming into it. And so I think that each time we have one of these, as long as you have the ability to adapt and not carry a bias throughout the entire thing, you've got that edge because that's what you've been working on for all these years. So
Yeah, Greg.
Yeah, I think it's important to differentiate bear market for an investor versus a trader. I mean, to us, I feel like a bear market for us is based off of lack of volatility, just general lack of opportunity. And I could care less personally, as a trader at least, if we're in a 5-year bear market, as long as there are good opportunities. That being said, if it becomes a long drawn-out bear market, the correlation is that trading opportunities tend to dry up. And I mean, I was trading from, I got started during the .com bubble, but from the period I would say roughly around 2002 to 2006, very tough time to trade. Just the opportunities were far fewer, and you really had to work a lot harder to make your money. I don't think we're there yet, but I see that potential in the next few years that we might go through one of those periods where really, back then what was happening was all those new traders like Nate's referring to that came about during the dot-com bubble, like they all slowly got washed out of the market, and you were just left with nobody left to create these irrational moves and opportunities. But but it eventually came back, so you have to prepare for that. Right now, I feel like it's definitely a tougher environment than it was 2 years ago, but there's still opportunity, and the key there is just like any other time, as a trader, to continue to adapt and adjust. And that's simply the environment we're now. If you are adjusting, you can still make money in this environment. And, at least for now, I feel like, it's still overall a decent trader's market. I mean, relative to in the last 20 years or so.
Yeah. John?
This is probably going to be the most boring advice that maybe a lot of traders don't want to hear, but Gregg mentioned something about from a trader or an investor, and if you're new getting into it, or you're someone like me doesn't really trade, doesn't trade full time, like this is a great time to start up in your 401ks, up in your IRAs. Historically, this is probably going to be a great dip, just slow and steady. Be buying into indexes and things like that. So there's still, which I still think could be a great opportunity for 10 years from now. You maybe you'll make more money rather than trying to fight some of these lower liquidity setups. So at least that's what I'm doing during this. I wouldn't be dabbling as much with the setups. Don't seem like they're coming as easy to me right now. So,
And is there anything in particular that you guys are looking forward to in the next year, 12 months, 18 months, as assuming the market continues to maybe be more bearish, or as interest rates go up? Is there any positives from purely a trading standpoint?
I would think so. For me, I read a lot of books. I like to stay up on technology, so I try to find those new things as far as what might be the next thing that society is going to use or even has an interest in. And I think that gives me kind of an advantage to just know that information in the back of my head. Like when Bitcoin made its crazy move in 2017, I read every book on the subject. So, kind of preparing me for whatever eventuality like 2020 happened, to just kind of be aware of everything that is in that market, what's going on, how everything functions. So I think upcoming there's going to be some clear leaders that come out of this, as far as whether they're technology or just consumer staples, whatever those things are. I think there'll be a moment that kind of shows a specific sector that is doing a lot better. Like right now, I've noticed solars are kind of leading the charge out there on every front over this year. So it's kind of focusing on what's doing the best while times are bad.
Yeah. I think, like John said, I think it's going to be a great time to position over the next 12 to 18 months. I don't think we're going anywhere quick, but I think that the lower we go, the better opportunities we're going to have when we do obviously eventually bounce. Because as soon as people get confident again, then you start to have, it starts to spread out. You have all these small cap runners, multi-day runners. So if you can navigate your way through this action, as soon as we bounce and it starts going up again, you're going to have the exponential, movers again. So I'm not worried about it, and I think, as long as there's liquidity and action like we've had, we've had some of the craziest percentage and outlier moves that we've literally ever had in this kind of market tape. So, they do sneak out and have these outlier moves.
Yeah. And I'm assuming quite a few traders out there probably had some bad habits. They might be blowing up their accounts. But at some point, a great number of them will save up, get in a new account. For those people, what are some of the lessons that you would hope that they learn if they come back to the market, or if they're in a drawdown at the moment and they're looking to not benefit, but rather improve their trading? What lessons would you give them with all of the experience that you have, having traded through these cycles? What would you tell them?
I think looking back at the last 2 years, it's pretty obvious that it's really easy to make money, but it's even easier to lose it.
Yeah.
I think that's the key lesson is, examine if you're one of those traders, you know, where your account's in a big drawdown and you blew up, you know, you got to examine that and you know, stop treating it like a game and figure out what you did wrong. And you know, in some ways, that's more important than figuring out how to make money. Is how to.
But really, what you did wrong. Like most people
Yeah.
always like they'll have some other reason why it didn't work out, and they actually never get to the actual reason why, and so they're never going to improve.
Yeah, I mean, we could delve into a really thorough psychology lesson on that. That's very difficult to do a true, honest self-examination. I mean, I think we all do some embarrassingly stupid things at times.
For sure.
You know, you might look at successful traders and assume they never do those things anymore. But it's like,
Yep. You're only one circuit halt away.
it's true.
I mean, I would almost say if you like the lifestyle that like being a trader affords of being able to do what you want, the one thing I could say is just be persistent and then always go after what you want. And that was kind of my thing. At the very beginning, I just kept losing. Why am I losing was the question I kept asking myself until, you know, I finally stopped losing on a consistent basis. So persistence.
And focusing on you, because you know, somebody's always going to make more, and I feel like every trader that I talk to, they're doing great, but this guy's making more, this person's making more, and then they try to force it and they start going backwards. Mm-hmm. And you know, I've got plenty of friends that can consistently make it, but it's not where they want to be. And you know, what I always tell them is just keep doing it until it doesn't work. You need to get as far away from, you know, your starting point. And then, like we were talking about earlier, you know, you've got your income stage, and then you need, you know, don't rush it, but then you have your growth stage. And I think a lot of people want to get to that next point too soon.
One thing you said that I think is really important is looking around and seeing others and sort of being distracted, whether it's P&L or it's the lifestyle that they have, or you know, whatever the case may be. Maybe they're coming up with excuses and not really looking at what they should change. And so what things in particular do you think people can do? I mean, can you guys maybe talk about how you guys improve and continue to improve the aspects that you're working on? I mean, I'm kind of thinking maybe of like, can people look at their winning trades, dissect those? If so, how? You know, do you guys look at your losing trades and tend to dissect those more? Nate, I know you run some stats and see what time of day maybe you do the best at. You know, for you guys, can you give everybody out there some practical tips on how they can get better rather than just continue to accumulate, you know, stock and hope for the best? What practical things can they be doing to level up?
I mean, I don't know what you guys would say, but what I've tended to do in the past, what I do is I spend 80% of my time if I'm reviewing trades or the losers and 20% on the winners, because I feel like over the course of this duration of trading, if it's a winner, I'm probably doing what I'm doing right, but I want to still kind of review, okay, could I have done it better? But the losers is really kind of what I focus on now, as to why was I so wrong? What was my mental state during that trade? And how can I get better at maybe changing that?
Yeah. One of the things that we've talked about in many years, and especially Traders for Cause and things like that, is I think it was Phil Godecker. Look at like those top 10 days of losses, like, and avoid that. And each year continue to try to avoid that and look at how much better, you know, you don't even have to become a better trader. It's just about eliminating those drawdowns or those bad trades. So that's one way. And then obviously the other side is look at what you do best and just focus on that. Ignore all the other noise. I mean, you can make 1 million trades a day, or you can just focus on, you know, your setup, a lot less stress, more size, go for it, and you'll probably be happier at the end of the day.
I mean, I do exactly what they're saying as well. I mean, I couldn't agree more with what Nate just said about Phil's approach. I've done the same thing. I looked at my trades. Like, if I could just eliminate the worst 3 trades of the year, what an improvement. But one other thing I do, besides looking at my own trades, is also just looking at a setup and try to, you know, recreate it. Like, what could I have done? Even if I didn't participate, or whether I did and botched, it doesn't matter. You know, what if I had been trading it? What would I have seen at the time? You know, and kind of go through those steps and essentially, you know, walk through, sort of like, you know, I mean, I guess it's a form of paper trading, but I'm not doing it live. But you know, but it's a way to also hone your skills by, trying to step through to see, like, would I've been able to see it in real time? Would I've been able to time it right? Would I've screwed it up? And, and it's just one more way to analyze trades, only it doesn't always have to be a trade you actually took.
To piggyback off of what Greg was saying, and Cody as well, one thing I found very interesting is if you, going back to review a trade, but if you've given yourself enough time, say, for me it was just pure laziness, I'd basically wait a month, go back, my trades were a month old, and then going back and looking at a trade and reviewing your notes or whatever on it, you gave yourself 30 days, sometimes you want to, it makes it that much more obvious, I feel, because you have a clear mind, maybe even forgot what the symbol was, but you're like, why would I do that trade? It becomes so clear that your mind is had time to process it, whereas the next day or 2 days later, you're like, oh, I see, your emotion's still in it, and you feel like, oh, I could have easily just avoided that, but giving yourself a little time, I think, gives you a clear perspective. At least this helped me a lot.
Yeah. Well, great. Thank you guys. I really appreciate it, and yeah, I think the market will continue to amaze us and do wild things every day, but as traders, I think we're well positioned to be able to react, and it really comes down to us and mastering ourselves in conjunction with taking what the market gives us. So thank you guys.
Yeah, thank you.
Thank you.
Greg, how long till that Uber gets here?
Looks like we still got a few minutes. Yeah, we're all right. We'll be here in a few.
Now that you're finally ready to discuss your secret strategy, what is it?
Yeah, I think it's time to reveal exactly how it works.
Get it, we're going trading.
Never seen one of these on my Uber app.
Si sa, noi del sud parliamo a voce alta. Si sa, noi del sud facciamo discussione imposta. Siamo allergici alle strisce, di restare in fila non ci riesce neanche ai funerali. Si sa, noi del sud leggiamo libri a stento. Si sa, noi del sud collezioniamo caffè a scrocco. Imbattibili nel lancio di parole da balcone. Siamo tesserati al club delle comari.
We need to check the map.
Yeah.
Oh my God. We are so not anywhere close to the line. Like we are like a mile away.
No, we have to turn the other way. We have to go that way.
The maps, I think, could be improved. Let's put it that way. I had no idea if we were right on track or completely lost.
Somehow we're missing Greg. This is the third time today Greg's missing.
I think Greg's the only one not lost.
All right, so you're about to jump behind the wheel now.
Yep.
And how confident are you with driving?
I guess it all has to do with how fast I go.
And how fast are you gonna go?
Pretty fast.
So which one is the brake?
Hey!
Greg, can you hear us?
I feel like Greg doesn't have his finger on or something.
It's a lot like driving a minivan.
Thanks guys for watching. I hope you guys enjoyed it. Leave a comment where you want us to go next. And a special shout out and thanks to PJ's Performance for giving us these things today.
See you next time.